Banks have been a little bit behind on the API journey compared to many other industries. In particular, e-commerce or fintechs or even NSE used to have a very large API base. In fact, NSE's API set is quite old. It was before APIs were called APIs. They had a computer-to-computer control language as their original description of API. But as a technology, banks have started adopting it only about 5 or 6 years ago on any scale. And COVID, like KRC was saying, COVID has really accelerated some of these initiatives. Suddenly banks realize that they are not as different as they thought they were. That there is ways to do security and integration simultaneously. That there is a way to open up your systems to the outside world without, being exposed to the damages. And banks also used to operate in a very closed world, that a bank would do everything on their own. This was the norm many years ago, that everything that was done by a bank had to be owned by a bank. And increasingly, that is not the case, in particular in payments, where the payment is done by somebody else and is only processed by the bank. So banking as a service has evolved in the relatively recent times as the way to do banking without banks. It is not done on our systems. So we are a large acquirer of credit card transactions, but the transaction happens on mSwipe or Pine Labs or one of these other companies. We are a very large processor of payments, UPI payments, but none of the UPI payments are originating on our systems. They are originating with Razorpay or Google Pay or all these many different systems. This trend, of course, accelerated in recent times, not just driven by the pandemic, but helped along considerably by the pandemic. We saw almost a 2.5 times increase between the start of the pandemic and the end of the pandemic, and about a 1.5 times increase between last year and this year. In digital payments, in banking as a service transactions. So we've seen substantial adoption, which means that our systems have had to ramp up to keep up with it. Now, 2 or 3 key differences. API banking has no concept of downtime. There is no window in which you say that the branch will be shut. People make transactions and bill payments and chewing gum payments and Zomato Swiggy purchases even at 1 in the night. And therefore, we must be up 24/7. And therefore, our infrastructure must be geared to that, without backup windows, without service windows that require downtimes. Banks' traditional systems all have end of day, beginning of day. So we had to re-engineer a lot of our systems to avoid this end of day concept, to have continuous systems. And second is, banks traditionally have done very low transactions throughput. Till recently, we used to have a 20 transactions per second setup. But 20 transactions is almost nothing in the wider banking as a service world. We had to ramp it up to now about 1,000 transactions a second. In certain areas, that's the throughput we do. There are other areas we are still at 50-100 transactions, which we are now trying to ramp up. And businesses have started adopting to this high throughput model. People no longer say, "Oh, I can wait 3 hours to see my balance reflected." They want to pay money and want to see their balance reflected because they know that the transfer is instant. So they want to see the results instantly. And therefore, we are working with a whole range of upgrades to enable this to happen. The forward and the reverse, to see the transaction happen in real time, to see the acknowledgement happen in real time, and to see reconciliation happen in real time. So that if you call my customer help desk 10 minutes after you made the payment, the help desk also knows you made the payment, which is not at all a trivial challenge. Help desk used to know only 1 day, 2 days later that you made a payment. Till then, they would just say, "Oh, I'll raise a ticket." And these are the systems we have invested in. Of course, we've had to do considerable hardware improvements as well to keep up with these things. Both in terms of hyper-converged hardware, which makes things lighter, faster, easier to manage, but also upgraded firewalls, upgraded WAF, upgraded this, upgraded that. And many of those we moved to cloud because of the unpredictability of volumes. So for instance, web application firewall, we used to have an on-premise version. We are in the process of moving to cloud because we cannot handle these sudden spikes in demand using a traditional setup, on-premise setup. We cannot handle 24/7 or 5 nines availability using a traditional setup. So therefore, many of these edge services, customer facing edges, we are moving to the cloud. We are moving away from legacy technologies that require reboots. We are moving away from legacy technologies that have long downtimes. So that is where our investments and efforts have been.